Good morning, everyone. How's everybody this morning? Hey, Tobias, good morning. Hey, Ben, Kevin. Things have kind of slowed down. Hey, Raj, how are you, brother? Good morning. How are you? Let's take a quick look and see what the larger picture looks like. See, the delay's not that bad this morning. So let's go over the overnight inventory. The overnight inventory is about 99% long. And what that basically means, folks, is that all the trading is above the close of the previous day. Hey, Jonathan. Hey, Donnie. How you doing? So what happens is this is actually healthy, normal overnight price action. So any inventory that they have underneath the close, they're getting rid of above the close at a profit. That's normal inventory action, which is it's kind of nice to see. That's something that we saw yesterday too. We saw yesterday's overnight um, lower, and we didn't take out that overnight low. So we have, there's yesterday's chart. It's a big range. It's a massive range. And then, of course, we had that fake news, which caused that big spike all the way up to 52.80. These are the levels that you want to watch for today. Our high today is a couple of ticks underneath 51.87. So the levels are working, right? The levels are based on inventory and cost basis. So all inventory is priced at a certain cost basis. It's accumulated and then distributed. It's always the same inventory. That's why these levels work over time. They work on a 1 minute time frame because that shows accumulation and distribution in a small time period. They work in a larger time frame because they show accumulation and distribution over larger time periods. Okay? So we're watching 51.48 to the downside. Those are your major levels on the downside is 51.48. I would expect it to get tested, you know. Um, yeah, those politicians really need to watch what they say, um, because markets are very reactive, and the algos that the technology is such that any kind of news is picked up and executed without even thinking, and that's the only problem with algos and electronic trading. In the old days, people would go, "Hey, is this real?" before they'd react to it. Now the reaction is instant. And well, some people got to sell some of their inventory from under 5100 over 5200 really nicely, and they just hammered it back down. Yeah, a lot of people got hurt, which is unfortunate. And this is why I always caution trading in these environments, don't just fall for everything, okay? And if you are long, sell into strength, okay? So we've got a smaller range today. That's number one, right? Um, and everybody will be going, oh, is the low in? Is the low in? We don't know, right? We don't know if the low is in. But it's tradable, right? And the price action tonight is actually pretty tight and choppy. And we'll see that when we go to the 1 minute chart. So we always do the same thing. We go and we look at the larger picture. So if this was a map, this is like the map of the city, and then the 1 minute chart is the map of the neighborhood that we're trying to navigate in. Okay, so when you zoom out, you see that it's fairly normal market reaction. I mean, business, right? We're in distribution right now above yesterday's close. That's normal, right? The price action is slow. The price action is choppy. The volume is a little lower, right? We also have still full margin at most of these brokerage firms. So it's keeping a lot of people out when they got to pay 19 grand to trade one E-mini contract. And I imagine high margins will be in place until there's some stability in the market, right? Because the clearing system and these brokerage firms, they have to protect their capital, right? You can't be in, you can't let the people who borrow money from you go crazy with it. Otherwise, you're going to get into a lot of trouble. So that's why they have high margins. It keeps a lot of people out. On a night like this, there's not a lot of follow through, and we'll go see what that looks like. So that's our overall plan. You're 51.48 and then 51.01 are your immediate downside levels, and then we'll go look at the stops inside this profile. Now, let's take a look at this profile. You can see, so our inventory is probably about 99% long because all of the trading, all of the volume is above the close. The overnight point of control is up here. We had good distribution in the overnight. We had good sales. That means they're making good sales. Now we put the price on sale, right, to capture all the buyers that are here, right? That's what you got to do because it's a market. You got to get rid of your inventory, okay? Here is the 1 minute chart that we use. VWAP's around 51, 57, 58, somewhere there. I'll double check, right? We have a seller here at 60, right? And I've just gone and I've marked off where the sellers are. The top of balance is 51.67. The bottom is 51.51 and a quarter, right? That's our balance zones. And you double them, you get 51.98. So that's the profit zone. Double it to the downside, 51.19. That's the discount zone, okay? And right now, the reason I use this zone is because I see sellers here and I see the sellers stop selling here. Okay? That's the reason why you have balance, right? It's the same people on both sides. If you talk to a market maker, you'll hear market makers say, it's slow, I'm on both sides. That's what this means, right? Which means they are a buyer underneath 51.59. They are sellers above 51.60, right? So what they're doing now is they're taking this inventory and they're selling it here. That's what you do when it's slow, okay? That helps us because now we have a playground to play in. So what we do is we trade the edges of the balance. So when it looks above and fails, or it fails to look above, you short, you put your stop there, cover some in the middle, right? And on the long side, when it looks below and fails, or fails to look below, you go long, you put your stop, sell some in the middle, right? And then larger traders can hold and sell at higher levels, right? And on the short side, larger traders can hold that short and cover lower, right? So that is what we call a rotation. We've got a nice rotation between 51 and 67 right now. That helps. It's a great, especially if we didn't have high margins right now, this is a good trading environment for retail, right? This is really good for retail because you know that, hey, if I'm taking trades, right, if I'm shorting this level, I can use that high as my stop The business reason for the trade is that the sellers are competing underneath that level. So if I shorted 66, 65 against 67, right, and my risk is 67, if the sellers see buyers, they will raise their price, which invalidates the reason for my trade. Does that make sense? Right? It invalidates the business reason for my trade. Most trading rooms, most trading coaches, they don't talk about the business reason for the trade. I am of the opinion that if you teach people what the business reason for the trade is, then they're not going to be just out there swinging wildly at everything that goes across the plate. Right? If you don't understand the business reason for the trade, you should not be in the trade. Right? If the business reason for the trade goes away, you need to get the hell out of the trade before you lose your money. Right? These are simple concepts. Right? Embrace them. Don't fight them. Right? It's very, very simple. Because execution is not easy, especially in this market. Execution is very difficult, right? We've got a slow night now. Let's see if those sellers step in at 67. If overnight inventory is long, we look for lower trades because we'll look for liquidation, correction to overnight inventory. If overnight inventory is short, we look for longs, right? Right now, 1,000, we are in rotation. So we look for rotational trades. So even though inventory is long, there is no reason to sell under 51.54 right now. Do you see that? So the other thing that people don't do, and don't ever be afraid to talk through a market. Okay? Talk through a market, write things down so you're aware of them and that you have some sort of awareness, some situational awareness. Right? So for example, if you're shorting this, right? If you're going to short, right? If you were shorting this, watch the offer, watch the candles. Let's make it as big as we can so people can see it. So what I'm looking for is I'm looking for a look above and fail. So I don't want to short the front side of this move, right? I'm not interested in shorting it here, right? I don't use the word liquidity. You guys are retail traders and you're not trading thousands of contracts, right? If shorts are trapped, they're going to try and buy back like they are right now, and they're going to force price higher. Keep it really simple, okay? That term liquidity is so misused by retail traders that it confuses people. It sounds really, really sophisticated, but unless you're trading 500, 1,000 contracts, unless you're trading millions of shares, you don't need to worry about liquidity, right? Just stick to the business, right? So the reason I won't short it now is because how do I find liquidity for my SPY contracts? How many SPY for your 3 SPY contracts? I don't know. Might have to use a dark pool, right? Or just go to the swimming pool. It feels smart, right? It's okay. Listen, I understand. Everybody wants to sound smart. I'd rather make money and sound like an idiot, right? I'd rather sound like a simpleton and make my money and go away, right? I'm not one of these guys who wears a suit on CNBC, right? See, look at that. That's a short. See, when you see stuff like that, that's why you don't short the front end of the move. You wait till it comes back in, okay? So now the trade is, let's see if we stay above 51.67, right? We're going to come back and look. We knew where our sellers were going to be, right? So we've got to have some serious buyers for the offer to lift over that. And the next sellers are going to be up here, right? So that just kept me from losing money, right? Because I was ready to short. I had the DOM up. I was ready to short the 67s, and then I saw it accept over 67, and then I saw this, which was a clear sign to stay the hell away, was that this candle couldn't get to the bottom of this level, right? Now, if I was really caffeinated, I could have gone long, but I was not set up to go long at the moment, so I missed the long trade, right? That's okay. You're going to miss trades sometimes, right? Just open up the screens, doing my analysis, setting up my zones. So I'm going to see whether or not the levels work. Do we get sellers at the middle of the next zone, right? And we did, right? The sellers stepped in right where that little white line is. That's the middle from 67 to 82 and 3/4. Now, if we clear that, the next set of sellers are going to be up here at 78, right? They're going to be up there because that's where they initiated before, right? And we took that F stop. So a market, when it takes a stop, it means there's some serious buying, and the sellers are raising price to take advantage of the fact that there's buyers, right? It's commerce, right? Always remember it's commerce. Holding through that 67. Hey, Travis, if you were lucky enough to grab 68 long, you should be out at 74 for the type of trading that you do. Grab your 4 points and be happy, right? If you didn't grab that trade, don't worry. Let's wait for the next setup. Make sense? Good scalp in and out. That's what we're here to do, man. Especially in this market. 1,000. Who's James that you keep talking about? Sorry. My name's JJ. It's not James. What does cut supply mean? Okay, I'll make it real simple, right? Say you're a seller, 1,000, and you got 1,000 units of something to sell, and you got no buyers. Oh, okay. All right. Well, you guys discuss amongst yourselves then. But for the rest of the people, cutting supply means that you see buyers and you're able to raise price. It's really simple, right? You need to lower price to capture the buyers if you don't have that many customers. If you got a lot of customers, you can raise prices. It's really simple, right? There's no, you know, it's not that difficult. The concepts are simple. The execution, that's what you got to work on. Yes, the margin question, right? It does affect markets, Sandy. So when they increase margin, it means they make you put up a lot more money to trade because they know that, well, let's say I'd say 100% of retail traders can't manage risk, especially in Armageddon type markets, right? And you're trading with the brokerage firm's money. Excuse me, I sneezed. That means it's true. You ever heard of that superstition? When you guys, when you say something that's true and you sneeze, you ever heard that one? Anyway, so you're trading with their money, Sandy, right? So if I know that you can't manage risk, I'm going to make you put up way more, like when you go to a bookie, right? So the price to place that bet is a lot more. You know what I mean? So instead of spending $400 to trade a mini, you're going to spend 19 grand to trade a mini, $19,000, right? That's because brokerage firms have to protect themselves from those who seek to do them damage. Because retail traders will just keep trading. If you give retail traders 100 grand to trade with, next thing you know, they'll be down 200 grand. If you give them 200 grand, they'll be down 500 grand because they just can't stop themselves, right? It's just because they have no concept of risk, right? That's difficult, right? So that's what we try and teach you guys is how to manage risk so you don't keep blowing up accounts, right? And one of those things is knowing when to trade, right? So when you see stuff like this, okay, on a candlestick chart, right? You see this? This means leave it alone, right? This right here. You don't trade that. Why do sellers allow the price to go up? If you were selling something, Herb, wouldn't you want to sell it for more? What's the business reason to move prices up is if you see buyers. Yeah, so if you're on sim, that means you're like it's like you're playing PlayStation. It's not real money, right? So you can do whatever the hell you want. Herb, do you understand? Think like a seller. Don't think like a buyer. The reason why retail traders never make any money is they've been programmed to be sheep and be buyers, right? Ever since we're little kids, they put cereal commercials on during cartoons and toy commercials so they imprint on you what to buy. Look for 67. Think like someone who has to sell 1 million units of something, right? That's why they call it making a market, because the seller sets the price. Yeah, so if you're on simulated trading, Travis, right, you're still, as they say in New York, you're still trying to get your button. Right? Think like a seller. Think like someone who has to move 1 million units of something, right? Not like somebody who's been brainwashed to buy something and stand in line to buy a phone, right? Think like the people who are selling the phone. Then you're cooking with gas, right? Let's see. Is this the look above and fail of 67 that I'm looking for? So they just let you trade on a simulated account we'll have to talk about this, Travis, because I'm confused, right? That's a real account. It's not a fund. It's a real funded account. Let's talk privately about that, so I don't screw up the stream here. Okay? So Sandy, did you get the margin question? So that's less people in the market trading tonight. So if we don't have any crazy economic news, right, you can see that the volume tonight is a lot less than it was yesterday at this time. It's okay. You know what? Your business knowledge, it will improve, and you don't have to have an MBA to be a trader, okay? All you have to understand is you want to buy a bunch of cheap crap and sell it at a higher price, okay? So say I'm shorting now, right? Say I'm shorting 65 quarter. My stop is going to be right above that 67, right? And then I'll put some bids down here, right, in the 62s and see if I can get a cover. Right? See, they stop selling right there. Let's see. Come on. I want to see it offer underneath 64 now. If the market doesn't offer under 64, I know that that short might be in a little bit of trouble. If we start offering up over 66, then I know I'm in trouble, right? So I'm short 2 at 65. I'll put a 64 bid in. I'm just testing it. Can't get a fill at 64, right? They're walking away from the 64s, right? And I just scratched the trade. Right? Admit you're wrong quickly. If that seller steps in at 67, that's okay. But in this market, I'm quick to scratch. Right? I'm quick to scratch. Right? One thing that prepared me is I couldn't get a fill at 64. Exactly, Herb. Right? So that's my first trade of the day, and I'm doing it with micros. So if I make a mistake, it doesn't cost me that much until I understand how well I'm trading, what the order flow's like, all of those things. Right? Did I scratch it prematurely? Maybe. Right? But as soon as I saw I couldn't get a fill at 64 and I was short 65, that made me nervous. Then as soon as I saw that candle lift, right? I saw the offers lift. I was like, I'll scratch it. Right? I don't mind being wrong. This time I didn't want to take that much heat. See? I would have been stopped out. And had I not scratched that trade, I would have been out 5 points. So you're not always going to be right. And you can't make, you can't make a big, hairy deal out of it. Just admit you're wrong, move on. Now you know that there's bids, right? You know that there's buyers there, right? You can really get hurt in one big candle. Look at the bottom of that candle is what, 65? The top of it is 72. So I was short 65, looking for a buy at 64. When my bid did not get filled, the business reason for the trade started to become obvious that I was wrong. Right? You need to learn to admit you're wrong quickly. And for those of people who freeze when they're wrong, right? We spoke about this earlier this morning with someone, right? When they're wrong, they freeze, right? You can't freeze. You have to train yourself to not freeze, right? You have to have your stops in, right? This time I was actually able to scratch the trade before the stop was taken. Does that make sense, you guys? Right? There's got to be a valid business reason for taking the trade. If you talk to somebody who's teaching people how to trade and you ask them, hey, what's the business reason for this trade? And they can't tell you what the business reason for the trade is, they're full of poop. Okay? I'm going to say that right now. Right? If they can't explain to you what the business reason to put the trade on is, they're full of it. If they can't tell you the business reason to get out of the trade, if they can't tell you the business reason to stay in the trade, they're full of it. Okay? It's very simple. You have to have stops in, Tobias, just in case you do freeze. Right? I don't understand MT4. I don't know what that is. Plus, what pair are you trading and what's the time frame? I'm not trading a pair. I'm trading the micro E-mini contract Noble Studio. It's a futures contract. It's not a pair. You got to have stops. Hey, Terrence. Right? Your stop is an insurance policy. It insures your account. It also gives you information. You're paying for information. Right? It's a business expense. Right? That's another thing. People get into trading and think that there's no business expenses. They're like, I should just be able to trade and make money and not have to pay any expenses. Yeah, mental stops. Mental stops are like playing Russian roulette. Eventually, you're going to take one, and it's going to hurt, especially in this kind of market, right? So if you have mental stops and you're a person who freezes under pressure, you're in big trouble. You might as well just stop trading, right? Unless you want to learn some discipline, right? You have to have discipline in this market. If you don't have discipline in this market, I don't know. I see it all the time. I see it all the time. Noble, I have no idea what you're talking about, but welcome to the chat. We're day trading, right? We're trading in a fast time frame, right? Because we're teaching people how to think quickly. We're not macro trading here. Thanks, Mind Over Matter. What we want to do is we want to give people practical, useful information without a bunch of gibberish and double talk and ooh, I sound really smart, right? Where do you put your trade? Why would you put your why? Where do you put your buy? Why? Right? So if I'm buying 68, it's because I know that sellers don't need to sell underneath it. My stop's going to be 67, 66, right? If the sellers start selling under 67, 66, the business reason for my trade of being long 68 does not exist, right? We use what we call the look below and fail, right? The look below and fail means the market looks below, the sell orders are complete, the fail, you take the backside of the trade, right? We do the look above and fail. When the market goes above a level and fails, you short this, put your stop here, and then target the next level lower, right? That's what I was doing here. I saw it come down. I thought it was going to do the look above and fail, so I shorted 65. I put my stop here. When it started taking out the 65s, I was like, oop, I just hit flatten. right? And then we got this big move up. Well, Terrence, if you're looking for a long, right, and you got to tell me when you're ready to do a one-on-one today, Terrence, right? If you're long at 51.75, there's a seller here. You're going to hit a seller at 77, and you're going to hit a seller at 78 and a quarter. Does that make sense? That's why when you're a newer trader, you want to be taking it from the edge, from like 68 up to 74, because there's going to be sellers up here in the high 70s. Yeah, there's inventory above. We'll get you there. Just keep the math simple, right? We're retail traders, right? We're not trying to program algorithms and all that stuff, right? The selling has stopped. We go long. If the selling starts again, we get out. The selling has started. We go short. The selling stops. We get out. The order flow last time, Travis, when COVID happened was not, it was like an elephant on acid. Or whatever the new designer drug is that the kids take that make them hyper. It was jumping around all over the place. We got locked limit down. We'd be locked limit down. And then it would open and it would just boom and then it would lock again. It was a mess. And a lot of people got hurt really badly because they were jumping into a swimming pool with no water. Right? Is it possible to have two trade setups in one? No. Terrence, you want to keep it really simple, right? Do one trade. It'd be like when in golfing, right? You can't do a drive and a putt at the same time. Get it? Focus on one good trade, right? What you want to do, right, is do one good trade, right? I'm not an options guy, so I don't know anything about straddles and all that stuff that you guys do in options, right? The selling stops, we go long. The price goes up, we sell into it. Really simple. And you get that look below and fail, right? In normal market conditions, you get that trade down so well that you can expand on it, right? Because your trade setup is a business, it's a way to do business that you can expand in time and size. It also has the risk built into it, right? And you train yourself like a pilot to react without thinking when the market does certain things. Like when you saw me short 65 and then I saw that offer starting to lift 66, boom, I got out. I didn't even think about it, right? I was like, boom, I'm out. So you react. You don't freeze. You train yourself how to react. But that takes time and it takes discipline, and you have to keep doing it over and over again. That's why retail traders, they go and change things all the time. I'm going to do this. Now I'm going to trade EMAs. Now I'm going to trade fibs. Now I'm going to do this. Now it's like some kind of a wave, right? It's That's the fool's game, right? Because basically what you're doing is you're chasing your tail like a dog, right? Stick to one thing that works. It's not going to work all the time. And learn why it works and when it doesn't work, right? So Tobias, you got sellers at 67 and 68. If you're long, be aware of that. Overnight point of control moved back down. So we're now in cleanup mode, accumulation. Right, there we go. There's that 68. If we can creep past 68 and you're long, your next target is 70. Nice trade. Make sure you sell into strength. One thing I will tell you, I mean, look at the order book in the ES. You know, oh, that's the micro. Let me go take a look at the mini. Let me see what the order book is like. Yeah, there's like 10 aside, 8 aside, 12 aside. The order book's thin. It's really thin. Exactly. I like a nice, clean, simple chart. Right? You know where the sellers are, you know where they stop selling. Right? Where the sellers stop selling or where the bids are. Let's see. When that next 1 minute candle comes in, see, I don't like this for a short just yet because I keep seeing the offer lift. Every time we get down to 64, 65, there's buyers, and the market runs away from those buyers. See? Right back up. And don't be afraid to be wrong. You know, you're going to miss things. These are complex markets to trade. Keep your execution model simple, right? So you can, and train yourself to get out of bad trades quickly, right? Yeah, it's a big balance range. The ranges have been huge. What was the range yesterday? 48.59 to like 52.80? What is the Twix? 46, 47, right? Yeah, there's a nice sideways range. Good looking out, Jonathan. Right? You got a nice rotation between 64 and 74. That's good. See if we can get past those 73 sellers. Good stuff, but Tobias. Nice, nice, nice. So if you're long off of that 67, right, there's going to be a seller up at that 72, 73 level. They're going to compete with you, right? If the order flow permits, Herb. Nice, half out. Beautiful, beautiful. Right, here we come creeping up on that 75. And you're going to have sellers at 76. So it's going to backfill now. Let's see if it holds the 72s when it backfills. If it finds a bid at 72, it should pop back up over 74. You're all out. Smart trade. Nice. Well done. Right? Way to take the money and run. Beautiful. Beautiful. Right? That's our job. Take the money and run. right? Just like the song. And I'm looking at that order book. It's getting thinner and thinner. Like there's like 3 contracts aside, 6 contracts aside. Holy cow! It looks like the NQ, right? Order flow permits if the customers are there, right? So if the market drops and they stop selling at cost basis, will they buy more? Well, they have to buy more because they're wholesalers, right? And if they see a bunch of buy orders, sure, they'll buy more. You got to remember the buy orders go through them, but that's not really important. The more important thing is when it gets to a level and they stop selling, you'll see the offer lift. That is your indication to get out of your short if you're short, right? You really don't want to focus too much on that. What you want to focus is on your trade setup. If a level is hit more than twice, it'll break through. Terrence, it all depends on the flow. Yeah, you gotta, this in this market, take the money and run. When you have markets that are 180, 150, 200 points in range, let's face it. The people who say that they're holding trades for 80 points, most of them are lying. Okay, like seriously, right? There's nothing wrong with making 4 to 5 points on a trade. If you can make 4 to 5 points on one trade, 3 to 5 points on one trade in this market, on 3 to 5 contracts, you can earn a living. You can make additional income, and if you can do that without blowing up accounts and over trading, right? It's not your money until it hits your account. Everything else is all BS. Yeah, that's true. That's the one bad thing about prop accounts or those funded trader accounts. People treat them like a video game, right? You know. But it's good for people, Greg, who will never have risk management, right? There are people who are never going to do what they're told. There are people who cannot follow simple instructions, right? And that's good for them. Like they refuse. If you tell them to be careful, they'll walk out in front of a truck, right? If you tell them to be patient, they'll become more impatient, right? And they don't actually belong in trading, right? But this allows them to pretend, right, and play for $39, right? It's better. I would rather them do that and throw away 39 bucks than actually lose their own money. I mean, let's face it, you can tell people what to do. Very, very few are actually going to do what you tell them to do, right? I've been coaching retail traders now for years and gone through thousands of them, you know. Very few people will actually follow. Very few people can follow simple instructions. You know, like the price is jumping around like crazy. You tell people not to trade. 4 hours later, they say, "Yeah, I blew up my account." Have you seen any such people change? What can stubborn people to do or change? That is something I've been working on, Naveen, for years. I've been, I have a friend of mine who's so stubborn, and I just told him to stop trading. Sometimes, it's not for everyone. This business is not for everyone. Maybe do some investing, you know. If you're really, really stubborn and you just keep blowing up accounts, you got to sit back and go, am I really cut out for this? Right? You got to be real with yourself. Like some people just cannot change, right? And it it just, I don't want to be rude, but go do something else. Don't torture yourself, right? So, and if you want to change, then you're going to have to change your habits, right? And it's going to be hard and it's going to feel torturous, right? It's going to feel torturous. Especially the worst is people who have lost money and are trying to make it back all in a hurry. That is the worst. Okay, getting above 79 up to 83 will be the next target, right? Those people who are trying to make it back really fast. Oh, Jesus. Excuse my language, but my God. Yeah, it's a bit of a strange night, Mike. It's a bit of a strange night. I would say there's quite a few trapped shorts under 5100, right? And right now there's not a lot of sellers. There's 83 or 82 and three quarters. Next set of stops will be up at 84 and a half, 84 and a quarter. What happens when the lows are getting higher but the highs are staying at the same level? Ah, that means the sellers are at that high, right? So the lows can get higher, but if it keeps banging into that seller or that group of sellers, that means they're competing. Just follow the offer, brother. Just follow the offer. It'll tell you all you need to know. Right? The offer is the smart money. The offer is the ones who have the supply. And they will set the price according to demand. Right? So if you if I'm selling 1,000 oranges and Terrence and Tobias and Mike and Kevin are all selling the same product and there's no buyers, we're going to start price competing and lowering price to get what buyers there are, right? Because we just can't sit on a bunch of oranges and have them go bad, right? You got to move your inventory, turn that inventory into cash. That is the principle of business, right? What's the point in sitting on inventory? That's why Walmart will not be undersold. You know, you see those commercials. We will not be undersold. We will match any price. You are watching market making in action when you watch that on television, right? Yeah, and you're not going to make all the money that you lost back on one trade. It's horrible because people lose huge amounts of money in this business because they have no idea what they're doing. And then they try and make it back, which compounds it. And it's just like, whew. Now, here we have a market profile reference, which is what we call a poor high, right? Where you have two half-hour periods where the high is exactly the same. That means that sellers are competing at this level, here and here. And the sellers are always going to be at the same place. Now, why is that? Well, because if you were a seller here before you started to compete, you'd be a seller there again. So if you're short, your stop should be 84, 84 and a quarter, right? Now, because order flow is a little unpredictable, let's see what happens, right? If you're short and it takes out the top of that candle here, right, you could be in trouble. And your next stop is going to be the overnight high, right? Now, one thing is, in a market like this, you shouldn't overtrade, right? Just because you're not long doesn't mean you should go short, right? Take your money and sit back a bit, right? This is another thing. If you make, if you have a good trade, take a bit of a break, right? Do you want to give it all back, right? Get paid and keep the money. It's like you getting paid and getting your paycheck and stopping in at the casino and blowing all your dough. Hey, GL, what's going on? How you doing? Good to have you with us. Right, so we're taking that poor high. That's going to create what we call a stop run. Right? So when you have a stop run, right, it's forced buying because people would have had their stops there, and now they're starting to buy back. See you, Terrence. Hey, remember, one-on-one, let me know what time, okay? And hopefully you get that Zoom thing fixed. We'll figure it out. No problem. See, this is a stop run. So here's a little trick. When the market comes back to this level at 87, right? Let's see if it bids there. Because the shorts are trapped now underneath 51.87. Okay? Because when we took that stop, the people who had mental stops, they'll put buy orders here to try and cover when we get back down. Look at that, guys. We might have single prints to the upside in a market crash. What a concept. It'll probably be temporary, right? But the wholesalers will milk this short squeeze for everything they can. If you know people are short at 87, you'll stop selling when you get to 87. I have 58.25. We're trading 51.89. You're 700 points above us, brother. Oh, there. Oh, I have to clean up those charts. 58.25 is a big level. It's a big zone. It's that 55.84 to 58.25. Those levels, GL, right? Just give me 1 second. I want to see if there's bids here. Just give me one quick second, and then I'll get to it. right? I'm looking for bids here. No problem, no problem, no problem. See how we came down to 58 under 88 and the market turned around and went like this? That's because there's buyers here. Oh, filled them. The only buyers are shorts. So now it's going to backfill. Let's see how far it backfills. All right, now getting to your question. The levels that you see here, right? The levels that you're seeing on these charts, they come from down here. 27.49 to 28.10. And then I doubled it, and I doubled it and doubled and doubled. This is from COVID times. And they still work because it's the same market, right? So there's your daily. It works on weekly, daily, candles, TPO, right? You'll notice on the weekly we came right down to that 48.28 yesterday, right? Thanks, everyone. Stay safe out there. I usually have the levels highlighted unless I miss them. On a longer time frame, they are tradable if you have the skill. I got to clean up my charts. I need to spend some time cleaning up my charts. Thanks, everyone. I really appreciate everyone coming in. Come visit us at microefutures.com. You know, we got that 7-day free trial. Give us a shot. And I promise you I'll teach you more in 7 days than you'll learn anywhere else. Right? Of information that you can actually use. Thanks, everyone. Be safe out there. Bye for now.